What are the top 7 stocks in my $1.5 million plus growth stock portfolio? And what are the reasons that I'm bullish on these companies long term? I'm fired up about this one, guys. Today, I'm going to share my top 7 holdings by weight in my primary brokerage, my primary taxable brokerage, my $1.5 million plus growth stock portfolio. And I'm going to share the reasons why I'm bullish on these companies long term. Now, this video today is focused on my primary taxable brokerage. This is different from the Fired Up Wealth Investing Club portfolio or the Fired Up Wealth Community portfolio. Now, you might remember a video a couple weeks back where I shared my top 7 holdings in that smaller account, that community portfolio. And the intent of that portfolio we created in 2022 new to show investors how to build, design, and grow a growth stock portfolio for long-term investing. Now, if you watched that last video, I talked about megatrends, investing in secular growth trends, technology trends. These are the trends of the future that have massive total addressable markets. And in that video, I shared this flow chart that you see on your screen. At the top here, you'll notice on the right-hand side, you have semiconductors. On the top left, you have cloud. And really, all of those megatrends, they flow down from those. You have to have semiconductors for cloud, and you have to have cloud services for pretty much every secular growth trend or megatrend for the next 10 years. And of course, artificial intelligence has been a huge buzzword for 2023. Now, all 7 of these stocks benefit from the trend of artificial intelligence, and 6 out of the 7 are really focused on enterprise. And if you remember back in January of 2023, I did a series, the top 10 AI stocks to buy for the next decade. And 6 of these 7 stocks I'm talking about today were covered on that video in January, well before the rip. The blueprint for my main portfolio, I'm focused on 50% growth stocks, that's the green. Dividend stocks, DGIF, 35%, that's the orange. Spec stocks, 10%, that's that pink color. And then ETFs and cash is 5%, that blue color. Now, I want to point out that the Fired Up Wealth Community portfolio, that 8 out of 10 risk, that has 60% growth stocks, 20% ETF, 10% spec, and 10% dividend stocks. So you notice that my primary is built differently. And there are 2 primary reasons for that. First, 99% of my retirement accounts are in ETFs. I focus on individual stocks in my taxable brokerages. And that might not suit you, and that's totally fine. If you invest in individual stocks in your retirement, it's totally fine. For my unique situation, I'm trying to get to financial independence, early retirement, financial freedom, to live off passive income, off those dividends. And I need to bridge the gap to retirement before I'm at retirement age when I can withdraw from those retirement accounts without penalty. And secondly, to piggyback off of that, I'm at a different stage than maybe you are. I'm nearing what I call the end game, living on that passive income with dividends. So my dividend basket is higher, and it's going to continue to trend higher as we get closer to my end target, 2027 to 2030. And just to share my end game concentration, I'm looking at 40% ETFs. So ETFs like SCHD, 30% dividend stocks. And I'm still going to have about 25% growth stocks, but a lot of those growth stocks will be more mature growth, and I'm not going to invest really in any spec stocks in my endgame plan. And the remaining of that 5% cash and bonds. Remember, every portfolio is unique to each individual investor. Your goals are unique, your risk tolerance, your suitability, and your time horizon. You start out, if you just started investing, you're in that capital appreciation phase, and you're investing in growth and spec, you're being more aggressive trying to build that wealth. And as you accumulate that wealth, you slowly convert into capital preservation. So you're gonna sell some of those profits from those growth and spec stocks and convert them into blue chip, high quality blue chip dividend paying companies and ETFs. And this is gonna take out some of that risk. Remember, you only have to get rich once. Once you get there, you don't want to lose it. So what are my top 7 holdings? I'm going to show you, and I'll provide reasons why I'm bullish for each company. The first stock is NVDA. Now, NVDA is not the same company that you grew up with. When you think about NVIDIA historically, what comes to mind? You probably think graphics cards, PCs, computers, video games, right? In the last few years, NVIDIA has completely transformed its business. It's pivoted more into data center. But the company now is much more than that, creating not only AI hardware, but also AI software for secular growth trends like robotics, autonomous vehicles, artificial intelligence, and more. And it's really gone from B2C really to B2B and focused really on enterprise. And you can really see the evolution evolution of NVIDIA on your screen. That blue line, it goes like this, and it topped out. Some of that's probably crypto mining, but look at that red line, 45-degree angle. That's going to be compute and networking. And again, that's focused really more on the enterprise. You think of AI hardware, software, and more. Here's NVIDIA's revenue worldwide from 2015 to 2023, and this is really telling. Go back to the left, it's all blue, GPU. You go to the right, you can see graphics is actually smaller. The largest segment of NVIDIA's business is now compute and networking. What are some reasons to be bullish about NVIDIA stock long term? First, it controls between 80 and 90% of the GPU AI market. Now that stat does vary by source, but either way, it's dominating this market. Right now, it has a winning edge over its peers. NVIDIA services include AI supercomputers, algorithms, data processing, and training modules. Recently, there's been explosive growth in AI demand, and management expects data center sales to rapidly grow throughout 2023. And this is driven by that new AI as a service business model, as well as other innovative products. In addition, cloud adoption continues to accelerate, and the global GPU market is expected to 10x over the next decade. Software is the next phase of growth for NVIDIA, and NVIDIA has competitive advantages that are very hard to replicate. Now, recently AMD announced they're getting this space as well, but really NVIDIA and AMD are the two players, and NVIDIA still dominates. And all of this will ensure that NVIDIA holds a top spot in AI for years to come. In addition to that, they have a huge partner ecosystem, and NVIDIA is powering the future of green energy with AI. Another thing that's not talked about enough is automotive, and this could be massive for NVIDIA. When you think about self-driving cars, autonomous vehicles, developing self-driving cars is one of the most complex challenges that we face today. It requires two computers. One is an AI factory in the data center, and that's used for software development and testing. And then secondly, there's an AI computer in each car. The larger computer, of course, is that AI data factory in the cloud. OEMs need to process massive amounts of data that's collected from their fleets. And then once that data is collected, they have to curate, label, and train their AI models. Using NVIDIA's Drive Sim, you can then test and validate that software. And this uses digital twins processing millions of scenarios. All of this software runs on NVIDIA's servers in the cloud. So NVIDIA is really becoming a software as a service cloud provider. From the complete AI factory in the cloud to the full software stack in the vehicle. Did you know that vehicles of the future, self-driving autonomous vehicles, they have nearly 100 different computers in each car. And these computers are for things like cockpit displays, self-driving, self-parking, and more. And NVIDIA is unique for the fact that they're the only company helping their customers end to end. And this is a massive opportunity for NVIDIA long term. It's projected right now to be around a $300 billion TAM, total addressable market. My second holding by weight is Microsoft. Now, Microsoft is a mega cap tech conglomerate, and they have their hands in so many different pots. You think of Azure Cloud, AI, ChatGPT, Microsoft Office subscription. So this is a software as a service company. It also has gaming, and this is Microsoft's revenue broken down by segment from 2012 to 2022 year end. Going back to 2012, you see a lot of green there. That's commercial licensing. But look at 2022. That blue is productivity and business processes. That black color is intelligent cloud. It's now the largest segment of the business. And then personal computing is still a big part of Microsoft in the gray. And Microsoft recently reported earnings. Q4 GAAP EPS 269 beat by 14 cents. Revenue of $56.2 billion. That's up 8.3% year over year, beat by 710 million. And it sold off a little bit from earnings, but the reality is this stock is absolutely ripped in 2023, and some of the expectations might not have been met on that earnings call. Revenue in Intelligent Cloud was $24 billion. That increased 15%, up 17% in constant currency. If you look at personal computing, it was $13.9 billion. That was actually a decrease of 4%. But earlier I talked about those secular growth trends and how everything is really fueled by semiconductors and cloud services. And Microsoft Azure is a close second to Amazon Web Services. They're doing a lot of great things with AI and with the enterprise, and I'm bullish on Microsoft long term. It also pays a nice dividend, and it's something that hopefully I can hold for many years. And I've had this stock since 2012, so my yield on cost is over 7%. The next stock is Apple. What are some reasons to be bullish about Apple stock long term? It's a $3 trillion company. Can it really grow more? Well, first, India. There's a huge opportunity for Apple when you think about growth in India. India is a growing economy, and its middle class and upper middle class is growing with more money to spend. Listen to this stat. These households are expected to increase spending 6 times from representing 37% of current spending, that's 1.5 trillion, to 61% of 6 trillion by 2030. 2030, 6 trillion by 2030. So middle income and high income households will drive nearly $4 trillion of incremental consumption spend by 2030. That's a lot of money, and a lot of money that could be spent on Apple products. Second is iPhone sales growth. Now, Apple has an amazing ecosystem, and once you're in that ecosystem, it's pretty sticky. All your different devices communicate and so on. You think, well, how can iPhone sales really grow? There are a lot of people that don't have iPhones, especially when you think international. And when you think about satellite broadband internet, that's going to bring a lot more people onto the internet, onto cell networks. And India really piggybacks off that as well. So these developing nations are going to have more money to spend, and they're going to want to buy things like iPhones over time. Another reason to be bullish on Apple stock long term, services. And I've owned Apple stock for a while, so I've followed it for a long time, listened to earnings reports and so on. And the company used to have a lower valuation metric. That PE historically was lower. It trades more at a premium because of these services. A lot of these services are recurring, and it brings in a lot of extra revenue with higher margins. So people like Warren Buffett invest in Apple because he really thinks it like a consumer staple, but Apple is so much more than that. Next is new products, and Apple continues to come out with new products. Most recently here is going to be the Vision Pro. That's their AR VR headset. I think there's a lot of opportunity here, and you think of metaverse and many other applications. Of course, it's not going to be for everybody, but I do think that this is going to have a nice revenue segment for Apple longer term. Another reason to be bullish on Apple long term, rock solid financials. Billions of dollars of cash on the balance sheet. Excellent return on investment to shareholders with dividends and buybacks. And I think there's huge opportunity when you think of healthcare with Apple, kind of integrating the Apple Watch into that. And also there's been rumors for years about an electric vehicle for Apple. And one final rumor that I've just seen floating around recently is an iPhone subscription plan, which could be a possibility in the future. But there are many reasons to be bullish about Apple long term, and I'm holding this one long. The third stock is Amazon. Now, Amazon's another one of those mega cap conglomerates like Microsoft, and they have their hands in so many different pots. A lot of people think about Amazon just as an e-commerce business, but it's so much more than that. And I really own Amazon for Amazon Web Services, and they're doing a lot, not only in cloud, but also AI with Bedrock. They're even designing their own chips for AI processing in their servers. And you think about the future for Amazon, really the sky is the limit. Robotaxis, they're in so many different areas. In fact, I think Amazon will be a key player in quantum computing, as well as Microsoft and Google. When you think about quantum computing, they really need platforms. And so you have these smaller companies like IonQ, which have the hardware. But the thing about Amazon Web Services, Microsoft Azure, Google Cloud Platform is they have these enterprise customers already. And they have enterprise platforms for these customers to consume data and resources. And when I think about some of these smaller plays like IonQ for quantum computing, it could be a good spec stock. But when I think longer term, I think platforms are going to be required. And Amazon is the king of cloud services. And I think the future is bright for this business in many different areas, including advertising. And Amazon's even looking at competing against Elon Musk's Starlink. Their product is called Amazon Kuiper, and they want to do low orbit broadband satellite. And you think about the opportunity for this, there's so many people around the world that don't have access to broadband internet. And this can open up opportunity for Amazon, but many other businesses that we talk about and those secular trends that we talk about, all fueled. When you think about the internet and you think about 5G, Internet of Things, I think that broadband satellite internet is a key part to the future. When you think about Amazon back in the late 1990s, it started as a bookseller. And Amazon Web Services kind of looked like one of those moonshot plays. Ended up being the cash cow that fueled the growth of the business. And now you also have an advertising segment that's bringing in more revenue than YouTube. So they have a long history of doing things that are a little bit outside of the box and thinking to the future. And here's Andy Jassy talking about Kuiper satellite internet as well as Amazon Bedrock AI.
Other times that investment strategy leads to things that are maybe not as obvious to people. AWS was a good example of that. I think that fewer people might have guessed that we would build a low Earth orbit satellite that we call Kuiper. But if you look at the need, there are hundreds of millions of households who have, and businesses that have no connectivity to the internet. We've been using machine learning in a really meaningful way across Amazon for over 20 years, and it's in everything we do. You know, the personalized e-commerce recommendations, the way we do pick, pass, and fulfillment centers, and Alexa. I mean, virtually everything we do. And then in AWS, we have over 25 machine learning services. We have the broadest set of functionality and set of customers in machine learning. So it's a big part of our heritage. But the last 6 to 9 months, you've seen this really exciting development in large language models and generative AI. AI, which fuel things like ChatGPT. And so the announcement you're talking about today is in our AWS business, where if you think about what AWS has been doing for many years, we've been really trying to democratize technology so that large and small companies alike can afford and have access to build amazing customer experiences. And so if you think about running these large language models, there's three pieces to it. The first is they all need compute. You're going to train models, and then the models spit out inferences or predictions. And so that compute, the key pieces are the chips inside of it. And so we've been working on specialized chips for training called Trainium and for inference called Inferentia that have the combination of price and performance in a really advantageous way relative to what you can do otherwise. Then most companies want to use these large language models, but the really good ones take billions of dollars to train and many years, and most companies don't want to go through that. And so what they want to do is they want to work off of a foundational model that's big and great already, and then have the ability to customize it for their own purposes. And that's what Bedrock is, which we announced today, which is it'll give you access to large language models from Anthropic, from Stability AI, from AI21, and from ourselves. We're externalizing some of our own models we call Titan. And then it lets
These are not consumer models. These are models to build software.
Yeah, they're big, large language models that you can build these generative AI experiences on top of, and you just have to fine-tune them for what's specific about your application. So that's Bedrock, which I think will change the game for people. And then, there are going to be these applications built on top of these large language models. ChatGPT is an example of that. What we announced today is something called Code Whisperer, which is for developers. And so if you're writing code, instead of having to write everything and do all the art and the science yourself, you can, in a natural language way, just say what you want to do, and Code Whisperer will generate the code for you. And that will substantially change developers' productivity.
So I've got 3 more stock picks to share with you. And if you're curious about seeing what my entire portfolio looks like, all 64 holdings, there's another video you can go watch right after this one. It's an exclusive on Patreon for elite or higher members. That's going to break down the entire portfolio, provide more commentary, and show you the weight for every position that I own. If you're new here, make sure you subscribe to the channel, click that bell for notifications. And if this video is helpful, drop me a like and drop me a comment. I also need to announce that this video is sponsored by the Motley Fool. If you'd like to see the 10 best stocks to buy now, visit fool.com/firedupwealth. You can also join our private community, Patreon Discord, by visiting patreon.com/firedupwealth. Again, join elite or higher to see the exclusive video covering my entire portfolio and weights. The next stock is Snowflake. Snowflake offers one platform to store all of your data, regardless of its structure, to provide managed and secure access to it, and leverage the unlimited scale of the cloud, all without having to manage infrastructure, so you're focused only on getting value out of your data. On top of the technology benefits that you get from Snowflake, the data cloud unlocks value from your data, and you can monetize your data, or you can even bring in data from external sources to enrich your internal data set. Live from providers with minimal management. Some say that data is the new oil. And as you know, I believe that semiconductors are the new oil because data requires semiconductors. But Snowflake is all about big data and getting value out of that data. It allows organizations to use their data in meaningful ways in real time. I also believe that Snowflake could become an ad tech giant through its data marketplace. And Snowflake's also doing big things in AI, especially after recently announcing its partnership with NVDA and its AI as a service model. NVIDIA allows Snowflake customers to connect to AI factories to their own proprietary data, enabling enterprises to turn data into intelligence. And this is in a very cost-effective manner, both cost in terms of dollar, but also time, and time is money. This allows a business to bring generative AI to its own data. You can ask your data questions and get meaningful answers in real time, saving a ton of time versus going through thousands of different documents. Imagine how hard that would be to go through all the different PDFs, hundreds of pages, and try to do that on your own. It's also more interactive and engaging for your employees. And the use case for enterprises here is absolutely massive, and it provides a lot of value when you think about efficiency. Here's a quick clip from the Snowflake Summit recently. This is Frank Slootman, CEO of Snowflake, and Jensen Huang, CEO of NVIDIA.
And for the very first time, if you data warehouse, we're going to connect an AI factory next to it, and you're going to be producing intelligence, the most valuable commodity the world's ever produced. You are sitting on a gold mine of natural resources, your company's data, proprietary data. We're now going to connect it to an AI engine. And you're going to, on the other end of that, is just intelligence spewing out every single day. unbelievable amounts of intelligence coming out the other end, even while you sleep. This is the best thing ever. So if you're a Snowflake customer, as many are, Frank and I are going to help you turn your data into intelligence.
Snowflake is a monster. It's a sleeping giant, and I believe it's highly misunderstood. I worked in software for over a decade, and I understand the power of these partnerships. Here's a snapshot of Snowflake's partner ecosystem. It's massive. Huge companies like Amazon, Microsoft, Google, and many others, including the largest consulting services and implementation companies like Deloitte and Accenture. So Snowflake has key relationships with these large public cloud services providers, AWS, Microsoft Azure, Google Cloud Platform. Here's a recent clip with Slootman and CEO of Microsoft, Nadella.
Go ahead. Absolutely, Frank. First of all, it's so great to be able to sort of, launch this next phase of our partnership. As you said, we've been working together, but I do think that this is, one of those points where you are already such a mainstream part of the core enterprise. And so therefore, Microsoft and Snowflake coming together to address what are pressing needs of our mutual customers so that they can do more is fantastic to see. And I think you captured it well, right? I mean, it starts with really both the Azure platform and the Snowflake platform coming together, because they're two mission critical things for any enterprise. And so the more we can work across all over the world, across all the different types of configurations for mission critical applications. And so we are excited about the next leg of work that we will do in bringing the best of Snowflake, the best of Microsoft Azure, and at the infrastructure layer.
The next stock is AMD. Now, AMD, like NVIDIA, is also going to be a huge part of those megatrends that we talk about. And this includes AI, cloud services, data center, and much more. AMD also recently announced an AI software platform to compete with NVIDIA. Now, as I've told you on the channel several times before, NVIDIA does dominate when you think about this space. And as of now, the only competitor on my radar is AMD. And I think AMD over time could capture 15 to 20% of that TAM. Here are some recent clips from Lisa Su, CEO of AMD, explaining their business and some of the future growth opportunities.
At AMD, we're focused on pushing the envelope in high performance and adaptive computing to create solutions to the world's most important challenges. From cloud and enterprise data centers to 5G networks to AI, automotive, healthcare, PCs, and so much more. Today, we're here to talk about our newest EPYC data center processors, our upcoming Instinct accelerators, and our growing AI software ecosystem. Bergamo is actually our first EPYC processor designed specifically for cloud workloads. Bergamo leverages all of the platform infrastructure that we already developed for Genoa, and it supports the same next-gen memory and the same I/O capabilities, but it allows us, with this design point, to expand to 128 cores per socket for leadership performance and energy efficiency in the cloud. I am very happy to show you Bergamo. What I'd like to say is, look, we are still very, very early in the life cycle of AI. I mean, there's so much opportunity for us. But when we try to size it, we think about the data center AI accelerator TAM growing from something like $30 billion this year, over 50% compound annual growth rate to over $150 billion in 2027. Let me wrap things up for today. We showed you a tremendous amount of new data center and AI technologies from our expanded portfolio of leadership EPYC server processors with Genoa, Bergamo, and Genoa X, to our industry-leading DPUs and SmartNICs, to our expanding AI software ecosystem, and our next-generation MI300X data center AI accelerators.
One more stock, guys. A reminder, if you want to see the entire portfolio and the weights for each position, 64 different holdings, join a leader higher. Go to patreon.com/firedup wealth. If you're new here, make sure you subscribe, click that bell for notifications, drop me a like, and drop me a comment. So the last stock is going to be Tesla. So of course, after being hammered in 2022, the stock is up big year to date. Tesla is one of the largest technology companies in the world, but it's also one of the most polarizing stocks in the world because of CEO Elon Musk. Musk. So what are some reasons to be bullish about Tesla longer term? The list is actually quite long, and I'm not saying the stock is cheap here by any means, but when you look at future growth opportunities, there are a lot of different hands and different pots at Tesla. As you know, Tesla has already established itself as a market leader for electric vehicles. In 2022, Tesla delivered 1.31 million vehicles. That number's up 40% from 2021. When you look at the legacy car manufacturers like Ford only sold 61,575 vehicles last year. And General Motors, the largest car manufacturer in the United States, only sold 39,096 vehicles last year. So Tesla in the United States, when you think of market share, absolutely dominates electric vehicles. So Tesla is really just scratching the surface when you think of EVs. In 2022, 13.7 million light vehicles were sold in the United States, and 67.2 million cars were sold worldwide. So electric vehicles last year only represented about 14% of sales globally. For some additional perspective, in 2020, only 4% of global vehicles were electric. And the IEA expects 14 million EVs sold worldwide this year. That's up 35% from last year. And of course, another thing to highlight here are the tax credits for electric vehicles. This could be a big tailwind for Tesla. The company sold 423,000 vehicles in the first quarter, with projections of 1.8 million this year. Now remember, that's a pretty big jump because they sold 1.31 million cars in 2022. Another tailwind for Tesla, Tesla's expanding its product line. And one big hole for Tesla's lineup this entire time has really been having a truck. And Tesla's long-awaited Cybertruck is expected to be rolling off assembly lines this fall in 2023. Now this could be a huge market for Tesla. In the US, full-size truck sales totaled 2 million in 2022. General Motors sold over 750,000 of those. And Ford sold over 653,000. So last year, 10.9 million light trucks were sold in America. And trucks don't just add to total unit sales, they also add to profitability. Back in 2020, Morgan Stanley did a report and they said that most of the profits for Ford and General Motors actually come from trucks. Listen to this stat. 5 vehicles, including the Silverado and Sierra, accounted for 80% of GM's earnings before interest and taxes. And last year, RBC and Morgan Stanley pegged Ford's profit per truck or SUV at $14,000 per vehicle. So if these numbers are accurate, the Tesla Cybertruck could be huge for both top and bottom lines for Tesla. In addition to the Cybertruck, you have Tesla semi-trucks. And Tesla is aiming to ramp up to 50,000 Tesla semi-electric trucks per year. Now, I totally get it. I know that Elon Musk often will overpromise and underdeliver when he talks about some of these stats and timelines. So take numbers like this with a grain of salt. But on a recent earnings report, this was a couple quarters ago, he said on a call, it takes about a year to ramp up production. So we're tentatively aiming for 50,000 units in 2024. That's just next year. And obviously will expand beyond North America. Tesla has many other assets in addition to the ones we've already covered, including one of the nation's largest solar companies and Megapack's emerging battery storage solution for utilities. And Tesla really is an AI company. It's an artificial intelligence company. A couple years back, we did a top AI stocks to buy, and it was one of the top picks on that list. We said really NVDA and Tesla were the 2 top picks when you think of AI stocks. So that'll segue into things like autonomous vehicles, robo-taxis, in addition to the potential for even robots like Optimus. Now, these are moonshot investments, so they're not a guaranteed slam dunk. You could argue they're somewhat speculative, but if either one of these work out even 50% of what, say, Kathy Wood is saying, the stock's gonna be worth a lot more money in 2027 and 2030. So you really can be bullish about several different things, not just electric vehicles. We're talking about semi-trucks. We're talking about artificial intelligence, robo-taxis, robots, and more. Thanks for watching, guys. I hope this video is helpful. I put a lot of time into it. If you're new here, make sure you subscribe to the channel, click that bell for notifications. And if this video is helpful, drop me a like and drop me a comment. Have a great rest of your day. Take care.